It is the backbone that built a nation, and it is a bellwether of the economy. The U.S. rail industry transports 40% of the nation's goods, and four giants dominate the business: Norfolk Southern, BNSF, CSX, and Union Pacific. But there are smaller players in the market, and today we're going to sit down with one railroad entrepreneur who is bringing the short line to the big time. I'm Chris Valerio, and this is Venture. Welcome to Venture, the world of small business and big ideas. Today we welcome Dan Sabin, owner and president of the Iowa Northern Railway Company, headquartered in Cedar Rapids, Iowa.
The Iowa Northern cuts right through the heart of corn country. The short line railroad runs diagonally, north to south, from Manly to Cedar Rapids, Iowa. In 1994, Dan Sabin bought the struggling line that at one time was part of the Chicago, Rock Island, and Pacific Railway Company.
8,000 miles of modern steel rails are in its network. This is a fabulous empire, this Rock Island wonderland.
Now, the 163-mile stretch of rail chugs away, servicing ethanol plants and grain processing facilities through Iowa's agricultural heartland, where it calls multinational conglomerate Archer Daniels Midland one of its customers. The ethanol boom has helped the little rail company that could become one of the most profitable short lines in the U.S. When Sabin took over, the railroad handled just 15,000 revenue cars, and by 2008, that number had grown to more than 45,000. Capital improvements on the line helped bring the average track speed from less than 10 miles per hour to 30. It's not all grain on the train. Sabin is also owner and operator of the Hawkeye Express, shuttling vans to football games.
Well, it's really exciting from the time of the first train when you get the security people and some of the tailgaters.
And it hasn't always been full steam ahead either. Last year's flooding of the Cedar River wiped out the line's critical Waterloo Bridge. It still isn't fixed, and rerouting has been costly. Also, the industry as a whole has taken a hit. The Association of American Railroads said May U.S. rail carload traffic was down 24.7% year over year. Nevertheless, Sabin plans to spend an additional $55 million over the next 5 years, betting that the Iowa Northern is a train bound for somewhere.
Dan Sabin with us today. Thank you so much for coming.
Thanks for having me.
So the railroad business, very much a part of who you were from a very early age, correct?
Yes.
Talk to us a little bit about that.
Well, my dad was a locomotive engineer. He started in 1944 as a steam locomotive fireman in Manly, Iowa. And my brothers all went on the railroad. There were 5 sons, and 5 of us worked on the railroad by some point. And I hung around the railroad constantly, and I had the opportunity to start when I was 15 in 1968 as a student telegrapher. And I worked as a track laborer and a number of things, and then I became the youngest train dispatcher in the United States when I was 18. And then I started going to school, wanted to get my degree and go into management. And
you eventually ended up at CSX, correct?
Yes, Canadian Pacific, then CSX, and then out on my own. And
you co-founded a company at that point.
Yes, there was a company called Iron Road Railways. We started short line movements with the Iowa Northern and in the New England.
So what was the experience of starting up that kind of first venture?
Well, it's pretty exciting. A lot of the big railroads had given up on a lot of these lines. So.
And what year was this again?
This was in 1994.
Okay.
And the East Coast was having a real rough time with railroads in those days. A lot of industries left. New England in particular. The Iowa Northern was kind of in its last breath in the Midwest, and I knew one of the original presidents of the line and worked with them a bit as a consultant, and they were about ready to give up. So the directors asked me if I'd find a buyer for them. I said, yeah, I'd be happy to if I could be considered as a candidate to buy it. It would be going home for me. And I knew what it could be. It was in very bad shape.
So first off, the first question being, where did you get the funds to buy it, and how much did you buy it for in 1994?
Well, in 94, believe it or not, we worked out a deal we raised $250,000 as down payment, and the grain elevators along the line owned it, so I paid them back at $35 a car, which is a penny a bushel. and we had them paid off in about 4 years. We ended up spending about $2 million to buy the railroad.
So you kind of did a barter.
We did. And we doubled the service immediately, and we really worked hard to get their costs down. Their freight rates were higher than trucks, so they had no incentive to ship by rail, even though they owned it. And we changed that fast. We were profitable within about 4 years.
And we're going to talk a little bit about that model and the business. But first off, for our audience and also for myself, tell me about short lines. Where do short lines come from, and how do they differ from the big lines? And what's the scope of short lines in the U.S.?
Well, there's about 800 of us now, and most of us are spin-offs from the large railroads who'd either gone through a bankruptcy or just after the Staggers Act in the mid-'80s, they started looking at lines that had low density and decided that it might be a better way to save the industry by spinning those off. So eventually about a third of all the track miles in the United States were spun off. And a lot of folks like myself, maybe a little more risk-averse and a little less bureaucratic and willing to try some new things, got into the business, and by far most of them are very successful now.
And what did your family think when you returned to Iowa? You're going to buy what your dad used to work on? Well,
a lot of people think I was crazy to come back to the Iowa Northern because it was in such bad shape, but it was really fun to get back to Iowa. It's where my roots are, and I knew I could make a difference. Dan Sabin, the current president of Iowa Northern Railway. You're watching Venture. Stay with us. Welcome back to Venture. I'm Chris Valerio. We are joined today by Dan Sabin, I should say, the president of Iowa Northern Railroad. And we were just talking about kind of how you got into the idea of buying that company in 1994. It was, to be fair, I did a little history lesson here. I learned that the rail line was actually built in 1856. And your line is very old as well, correct? Yes, our line was built mostly in the 1870s. I think it arrived mainly in about 1876. And when you got to the line in 1994, when you bought it, it wasn't in very good shape, correct? No, it was in very bad shape. There were very bad track conditions. There were 5 locomotives, but generally only one would be working at a time, so it was very difficult to move any traffic at all. What was the customer base at that point for the line that existed before you took it over? There were about 15 grain elevators on the line. They didn't ship to very many processors or anything, but we handled 235 cars a month when we took over, and now on a good month we'll do 4,000 carloads. And one of the things you did was you invested a lot of money when you first got into the company. You invested about, I think I read, $1.3 million per year since you've taken over that company, and you've increased that carload a ton. So talk to me about the building growth strategy. You told me in the commercial break, you were saying, you knew exactly what you needed to do coming to that railroad. So what were those steps you needed to do? Well, one of the things before we took over, the grain elevators on the line owned the railway, and they were trying to manage by holding costs down. So they kept increasing the freight rates, hoping to match that cost curve, and as a consequence, they were less competitive in their own marketplace. So what we did when we took over, they had 64 grain cars. They were working just several days a week. We put it on a daily schedule. We went out and got several hundred hopper cars, started looking for some better locomotives, and we ran with daily service. We were able to turn the equipment much quicker and be far more efficient. And then we cut all the freight rates by 20%. And how quickly did your business increase at that point in when you made those initial changes? It was roughly doubling every year then. We were profitable within about 4 years. And then we started putting more money in the track. We had some state grants. We had a few federal grants that came along, and every time we picked up $1, we put it in the track and bought more cross ties. And then the ethanol boom came, correct? It did. And so let's talk a little bit about that, because that's a huge part of what the rail transports at this point, correct? On both ends of the production line. It is. ADM has a huge ethanol plant at Cedar Rapids. When we bought the line, they didn't even ship corn to ADM in Cedar Rapids, and now we do about a third of all of their grind, and that represents about close to 17,000 cars a year. And then we encouraged a company to build an ethanol plant on our line, And we gave them good service. We gave them route options. Very few short lines have more than one railroad connection to the outside world, the system, if you will. And what we did, we have 5 connections or 5 outlets to the other railroads, so we can kind of leverage the big railroads a little bit to get better freight rates, better service, and it makes our customers far more competitive.
And how do you, I mean, how does that work? How does that licensing for those different areas work? The actual 5 connections to the other lines work? How does that money transaction happen?
What we do typically is the short line will go on what's called a Rule 11. We'll set a price for our portion and send the customer the freight bill for our portion, and then we interchange it to the major system, and the customer has through rates then on the entire network. As we get a little bigger, then we become part of their tariff, and we can collect the money, but we all share on a division of revenue. It's generally based on mileage and what markets it's serving.
Okay, now how did you secure that ADM contract? What were the steps to getting that? And when did that happen exactly? And how much did it did it increase your business at that point?
Well, it was very big. In about 1994, as I say, there was no business going to ADM. We had one elevator that had merged with another firm, and they had a lot of experience with ADM, so they introduced us to ADM. Prior to that, we'd go down and call on them. We couldn't even get in the door. We were just a mom-and-pop shop, and they really didn't have a lot of confidence in us. So after about 5 years, they gave us a chance at it, and our service became very, very dependable, and we went to a just-in-time delivery. So literally at 3 p.m., they put an order for the corn they want at midnight that night, and that's what they get. They don't have any more, any less, so they don't have a lot of the inherent costs of detention or demurrage. And they don't have a lot of congestion that ties up their plant. And they started really liking the concept of working with a short line. They're
your largest partner. What percentage of your revenue would you say comes from that partnership?
Well, one time it was about 75%, and now it's in the area of about 48% because we've grown so quickly with other types of commodities.
And do you want to continue to diversify those different areas?
We will diversify. We're looking at a lot of new things with our new terminal. We handled the John Deere tractor business, mostly exports out of the Waterloo Works for Union Pacific. And a few years ago, Union Pacific came to us and said, we'd really like to focus on wind energy, and we think that Manly is the place to put it.
And I want to talk about that when we get back. Dan Sabin, the owner, the president of Iowa Northern Railway Company. You're watching Venture. Stay with us. Welcome back to Venture. I'm Chris Valerio. I'm joined today by Mr. Dan Sabin, the president of Iowa Northern Railroad, and wanted to ask you, before we get into this wind power, which we were just talking about in the last block, but first, let's talk about that facility in Manly's, because that was one of the biggest capital improvement projects that you have really had. Tell our audience a little bit about that project and what it's done for business.
Well, what we decided about 4 or 5 years ago was, as the ethanol industry matured, there were a lot of customers who built their ethanol plant on one single large railroad. And we decided that as the market evolved and the renewable fuel standards showed what the building of that market would be, we took 100 acres and we joined with a family from Buffalo Center, Iowa, the Kewitts, who had a company called LB Transport. It's an ethanol truck company. So we put together a joint venture and put together about a $16 or $20 million facility so that people could market their ethanol all over, depending on where the best markets were in a given time. So if they were, say, on a Western carrier where they had access to Los Angeles or Texas, the best market might be New York Harbor. And we had good freight rates with the Eastern carriers, so we were able to work out a means of having that ethanol trucked into Manly. We'd stage it and then build 100-car unit trains to New York Harbor or Albany or Baltimore, wherever the market was hot. And it allows the customers to tell us where they want to be, and they're not captive shippers if they're on Iowa Northern.
And how much did it cost to actually, how much did you have to invest into that project?
Well, we started with $1 million apiece. And then we borrowed $4 million. And then we had another company, Keenan Advantage Group is a large chemical truck company. And we kind of pooled our resources, and we ended up getting nearly a $20 million facility built with only about $4 million in debt.
And you've, since that point, made that money back at this point?
Well, it's still a work in progress. We're looking for some fairly large expansions. Our goal is to have Iowa Northern handle 1 billion gallons of ethanol within by 2012. and we're probably there about 300 million gallons now. So we're getting close.
Now, there's been a lot of changes on the political landscape with regards to ethanol, and so let's talk a little bit about that. One of which is certainly there's an EPA plan to kind of measure biofuels' effect on land cultivation. So there's some concern that might play into the ethanol industry. Also, I know that the Obama administration is encouraging other types of renewable energy outside of ethanol. So do you have any concerns that the industry might not take off as much or reap as much and therefore have an effect on your bottom line, on your revenue?
We don't. We think the renewable fuel standard at least is going to hold a fairly high percentage of ethanol. And within 300 miles of Manly, Iowa is 64% of all the ethanol produced in the country. So we're centered geographically very well. We're getting a very strong reputation for very high quality service and routing options. But we're also very focused on cellulosic ethanol. We're also focused on conversion of crop waste, the corn stover, into fuel. With the cap and trade situation now in carbon credits, we expect that probably 20 or 25% of the coal-burning power plants will have to blend a biomass product. So we're working toward the concept of having the crop waste pelletized and then shipped to utility plants and even exported worldwide as a fuel.
So diversifying, certainly key to your company. And a lot of one of those diversification areas you mentioned was wind power. Talk to me a little bit about how you guys have gotten in on that area.
Well, when you stand at Manly, you can look in almost in any direction and see about 300 or 400 wind turbines. And about 3 years ago, the Union Pacific came to us and said that they really wanted to focus some attention on the wind energy and moving the components. And they had 5 or 6 sites selected. And they said, Manly, Iowa is right in the middle of where we need to be. So we'd like you to be the last mile with us. And so a lot of the originations start on short lines on the first mile. And then the UP brings them from California, from Texas. We get them from the East Coast. We get them from Canada. And last year we did about 900 carloads of wind turbine components in the Manly terminal. And now we're looking at about 3,000 this year.
And we're with Mr. Dan Sabin, president of Iowa Northern Railway Company. We'll be right back. You're watching Venture. Welcome back to Venture. I'm Chris Valerio. I'm with Dan Sabin, the president of Iowa Northern Railway. Let's start by talking about the flood first off, because obviously it damaged one of your main bridges. It's
hitting us very hard, as well as our customers. The 300-mile detour, fortunately, Union Pacific really came to our rescue. And as soon as the bridge was down, they own the bridge, but we're the only ones that use it. And they said, let's work together to really take care of your customers. And ADM being our biggest customer at the time, the bridge went down. We started detouring trains 300 miles, literally up to Manly, then down the UP spine and over to Cedar Rapids. And ADM stepped up to the plate. They gave us they prepaid their freight bill for a while so that we would have cash to make payroll. And UP's been very, very good. They're really standing by us. Canadian National has come in now. We've got a little shorter detail for some of our corn with them.
And it still hasn't been built, correct?
No. My son is very active in government affairs, and the day the bridge went down, he was on the phone with Congressman Braley's staff from our district in Iowa. And Congressman Braley actually did an act of Congress to get the money put together. It was just awarded to us a couple weeks ago, but it'll cover our portion.
How much do you expect revenue to gain this year, or do you expect to see a decrease in revenue this year?
The way it's looking, we're going to have a 3% growth in 2009 over 2008. We had projected about a 40% growth before the bridge went down. And but the other side is, once we get the bridge done, hopefully in October, we're looking for about a 59% growth next year with all the new customers that we have online or coming online next year.
Where are most of the new customers coming from?
Well, we got a new ethanol plant on the line. Hawkeye has 2 plants. We're able to consolidate their volumes. Manly Terminal is growing in a lot of different commodities besides ethanol. Right
now, 40% of the earnings estimates for all transport companies are down. Were cut in March. Freight Railroad for the month of May was down 24.7% compared to last year. So the big guys are obviously having a hard time. So is it because of short lines that they're just being able to weather this more? Or?
Well, I think so. We're also very fortunate geographically. When you have an agricultural base, the agriculture is going to have to move regardless of the economy. And we've also seen that the areas that affected us, like John Deere tractors, it's financing issues that's really hurting now. We used to do a lot of tractors to Russia, and the credit just shut off, so those tractors just aren't moving. And the wind industry, we have about a 500% growth in wind components this year, but it was expected to be about 1,000% until the credit crunch hit.
What kind of cost-cutting measures have you been taking?
Yeah, we've put most of our employees on a 4-day week right now, and that hurts. We really don't like to do that. We don't want to lose employees, so we would decide to do this instead of cutting back our staff. And we've reduced train service to coincide a bit more with the demands. But we expect once our bridge is back that we're really going to crank up again by about 40% just in our activity.
So one of the things in Congress happening right now, of course, they're trying to pass a bill to kind of overhaul the regulatory area, and a lot of the railroads are against it.
We're very concerned that if there is a major re-regulation, that it's going to really hurt our ability to price competitively, and the capital spending is the big thing. The billions of dollars spent in the railroad industry every year by private companies. And if we start getting more regulated and it starts infringing on our margins, the ability to constantly reinvest and increase capacity is going to be damaged severely.
And that is Dan Sabin, the president of Iowa Northern Railway. Thanks for joining us.